Hello, ladies and gentlemen, and welcome back. Well, in general, I think most people out there can agree this is one of the most pivotal points for markets around the world that we've seen in some time. The FOMC meeting was interesting, and no, it wasn't because of the 25 basis point rate hike. It was more Jerome Powell's commentary. He actually mentioned that deflationary pressures were now underway, and markets in general reacted pretty positively. Deflationary boom stocks went ballistic. But is this something that we should be paying attention to, or do we need to be more cautious? We've often tracked smart money versus dumb money on this channel. And as we know, there is a lot of smart money, inverted commas, on the sidelines still waiting to get into markets. So will it be a rehash of 2020 when dumb money such as retail picked the lows and rode it all the way up? Or is something more sinister on the horizon? Let's understand these markets and break them all down together right now, including stocks, commodities, and cryptos. Well, welcome back everybody to the Daily Show where we talk about markets around the world. We've got the lead news, the macro data, the key indicators, and the big key levels that you need to be watching right now coming up in the show. But let's begin with Meta stock because we expected a 10% move. It was over 20%, 20% up after cost cutting and $40 billion payday for investors overshadow another earnings miss. So it's like kind of, what would you say, sugar rushing bad earnings at the moment. There's bad earnings, but they're still rallying. And why is that? Well, we'll start to talk about that later on today in the video. So of course, the FOMC statement came out. You can pause the video if you ended up wanting to read that statement. But in general, there were a few key points. And I think there was nothing much new other than Jerome Powell's speech and Q&A. More rate hikes sufficiently restrictive to return inflation to 2% over time. Well, that's normal. The committee will take into account lags, normal. And quantitative tightening will continue on schedule, again, normal. The committee will monitor risks. After Jerome Powell's speech, what I'm starting to think is unless we're getting bad economic data, it's probably not going to really foreshadow huge sell-offs in the market. And part of that reason is because he was generally upbeat, more upbeat than I expected. I was on the channel talking about how I thought he might come out and try to force a kangaroo style market, that is drop it, because it's not in the Fed's best interest to probably have a market above 4,000 realistically over this disinflationary, trying to force disinflationary period. But let's have a look at the markets. Over on Twitter, I shared this chart and we will talk about it later. But remember to follow us, links in the description down below on all of our social media platforms as we do share more than just YouTube here. And we're about to launch also a TikTok with quick 2-minute daily updates. So if you're interested, follow the links down below. Expected weekly options high. Yes, we do have a very interesting hit. This is the options expected weekly ranges. It tapped the zone and rejected that level. We'll look more at that later on today's video. So let's move over to this chart now, which is of course smart money versus dumb money confidence. A few of you are probably a bit annoyed at this chart, and that's because it's only a tool that we can use to attach two key levels. Remember, what happens on this chart does not just flick a switch and instantly move into price action. We've got dumb money, which is historically us retail traders buying out of control, and smart money continuing to decline in purchases. We do need to realize that mutual funds are sitting with huge cash on the sidelines. Now, in 2020, they were wrong. In fact, dumb money was flying out of control and mutual funds were late to get into the party. In fact, they didn't really enter until September to November of that year. So are they wrong again, or are they correct to be on the sidelines? Well, time will tell. But these disparities do have some negative connotations. Effectively, when we've seen disparities this large, markets have tended to trade sideways to down over the next couple of months. That's just what we've seen in the history of these particular charts. And we will continue to use it because it's a great flow concept. Fear and greed index, 73. Obviously, the greed is quite high here. We're almost moving into extreme greed. You know what Buffett has to say about this? This is certainly a time to be cautious in markets and not really feel the FOMO. If you are jumping in, jump in with risk adjustment strategies, whether you're using options with fixed risk or you're using something else with the futures with stop losses. I do think it's time to be very, very cautious on this current bull run. And if you missed it, don't worry, there's always another opportunity. Today, we'll be taking a look at something that I feel fairly strongly about, and we'll just discuss it together. Q4 2022 earnings beat data, it's actually improving. 65% beats, 356 versus 192. That's actually a little bit better than it has been, so that's an interesting point. When it comes to earnings calendar, we know we've got the big three, Amazon, Google, and Apple, coming out on Thursday. What a blockbuster day. Could it be the make or break for this rally? I think so. This, along with non-farm payrolls, will give us a big weekly close. And at this stage, I'm actually waiting for the weekly close to make up my mind, because this is a tough point for markets. So we'll talk about that as we get into the charts. Let's have a look at the flow. Well, the flow continues to be in everything to do with deflationary boom style stocks, semiconductors, technology, consumer discretionary, gold. They were the best. We're still not seeing the resurgence of defensive sectors. And until we see that, we usually don't get crashes or any kind of sell-off that's substantial, because most of the time the market will move into defensive sectors, then dump it. It's one of the great techniques that you can use in over, pretty much decades to try to figure out what smart money's truly doing underneath sometimes. Let's have a look at clean energy versus semiconductors. They're both out massively over the last month. Consumer discretionary, very nice. And then, of course, we've also got metals up here. I want to discuss metals, though, and materials a little bit later, because I think that's one that's very, very overbought at the moment, and it's certainly at a critical point. Let's get into the charts. We'll start off here with the VIX. New low, 17.86. Wow, the VIX spikes the low. So will we see a resurgence in volatility? Well, at the moment, we certainly are not. And if the VIX goes too much further down, it kind of makes you think a bull run is about to start. Remember, technical bull runs are when the market goes from the low to the high of 20%. We're at about 18 point something at the moment. So we're very close to what they would call a technical bull run. Now, these do false break sometimes. We had that during 2020 and we had that during 2007-8. But still, that's what a technical bull run is when it starts. Let's move over to the US 2-year. It was down pretty heavily. We ended up seeing 2-year yields go down to 4.1%. And we also saw drops across the board. The 10-year dropped down to 3.4%. But noticeably, we still had pretty decent moves here on 4.8% still being expected by September of this year, and one rate cut effectively still being expected by December of this year. So that wasn't ruled out either in Jerome Powell's speech. Basically, he kind of sidelined the project when they asked him a question about it. Look at TLT, looks poised to potentially break out. It's been hovering around this zone. I did hope that TLT would come down here for some. This is definitely one of the areas that I like to be in during these times. It's probably the safer kind of area. And the main reason is long-duration treasuries do well when you've got rate cuts expected on the horizon, and especially during periods where you might expect recessions to come through. And that's been what the most money's been going into recently, but it's still just kind of like hovering around this level. I like it down here, and at this point, yeah, well, it's about potentially poised for a technical breakout. Let's now move over to copper, because I think this is the most interesting chart right now in all of the industry. And the reason is basically copper's at an incredibly pivotal point. We can stack a whole bunch of fibs on top of the level. We can stack previous supply on top of this level. We can stack, of course, what was a Wyckoff distribution and a return back to that area. And we also know this is the most traded zone of copper over that whole entire period. So with all of those things taken into account, is this the beginning of a bit of a bust in materials that have run so heavily recently? I'm starting to think it is, and certainly there's a lot of hype in this industry. It's a crowded trade. If we actually go over to energy stocks as well and we load up the energy sector, you'll notice they're all on those kind of previous highs. So we've been talking a little bit down on energy for a while. We actually saw another bad sign for it the other day, which was a little island reversal up here. And I do believe that things like energy stocks and some material stocks, such as iron ore in particular, are potentially overpriced at this stage. Remember, there's always an opportunity somewhere else in another market. Whether you're just sitting there focused on the tech stocks, which are booming right now, and you missed out, there's generally some kind of opportunity. I'm not saying this is the one for you. I'm not even suggesting you do anything, but there's always potential somewhere else. Let's move over to the US dollar, and it dropped pretty much like a rock. So that shooting star was too much for it. This looks like it was basically distribution. Now the question becomes, where does it go next? Now, depending on which DXY you use, you'll see underneath around this area here is a low. Now, it depends on whether you're using DXY futures like I am or some CFD products. But I think that it looks like the US dollar is now weakening. Unless the weekly can fully reject, which at this point it isn't, you have to be bearish on US dollars as of pretty much the break of yesterday. And also, you know, that really big rejection week that came through here. You notice where it could come back to, though. There's an order through here. So I've got the POC of the area. I've got the 61.8 sitting just underneath that parity level. And I think if it does take out the parity zone, this is most likely where we'll see a build again for the US dollar. This is one to watch. If you're already in it short, there's not much reason to say, wow, this thing's turning around yet. The weekly will be incredibly important for the DXY though now. And these are some seriously critical zones to have on your charts moving forward. I really like these levels. And I think if they hit, we should see some type of reaction. Let's move over to gold. It's continued to kind of sell off this kind of trend line here. Nice rally for gold. I've done some work. I think POC area down here. If we do see, let's say, a rally in the dollar index and a weakness in gold, as it did break to a new high, somewhere around this 1930, 1927 should be where buyers recommence themselves if they're willing to push it higher. And at this stage, it's still in an upward trend. Luckily, we talked about this level because if you were trying to go bearish on gold, you can't really go bearish until it busts down below this 1900, 1895. It's just not possible to do it. You've got to focus on that longer term trend. And we haven't seen a blow off, which I'm expecting at some point. And at this stage, it just looks all green, all good. I mean, look at that big rejection wick that we got in the previous session. And then the FOMC. Non-farm payrolls is coming up though, so that could sort out this particular one. Set alerts underneath here if you're a bear. And at the moment, this is a very interesting level around that 1930 to be watching. Let's move over to US oil. It was a weak session for US oil as it dropped through. Unfortunately, we had to give up on our bullish hopes once it got through this level of the 78 kind of 30 zone. And at the moment, it's mostly looking bearish. I don't have any, US oil trades in anymore. I was always aiming for 65 a barrel, but I decided to give up on that around the price it is right now, about 77. And yeah, it is a bit of a tough chart. I think you know where the bulls recommence, but because of that copper chart, I'm also just kind of pulling on most of these commodities right now. Of course, that's just my opinion, but it's interesting. And at this moment, that's where we're at with US oil. Mostly looks weak on the charts. Let's move over to Tesla. It takes this little high, which you can see just here. It took the high and it slightly rejected that level. If we pull a point of control through here, you'll notice that was also the POC level. So around that 182 of this order block, or the area here that led to the big sell. Pretty pivotal point for Tesla. What I'm going to do now is I'm going to set an alert underneath this low, just in case it does go down there. And I'm not really feeling too much FOMO or fear here either way with this particular trade. The way you've got to look at it is if you do end up getting a trade, if you do end up seeing it weaken through to here, it's probably pointing towards this being a trap long. We don't know that yet at all, but certainly a critical point. And this is usually where you're going to expect some weakness to come in from Tesla. If it does end up rallying further, I've already got another alert level to be watching. And these are key zones where if bears are recommencing on these stocks, they're coming in here. This is obviously a very aggressive bullish run right now, but it's in this critical supply zone. So for me, it's a do nothing, wait and see style trade. If you go over to the options market, people are getting crazy hyped. Look at the 200s. They're getting crazy. 55,000 units. We've also got 180 as a pretty big high, and some mad scientist over here at 265. Who knows what they're doing, but they're getting involved. And there's a lot of calls coming into this stock. Over 1 million units in a week that was probably expected to be well under that. Let's move over to Apple, and we'll take a look here. Nothing much to really report on Apple. It wasn't able to make a new high yet. We've got the expected weekly options highs and lows. Maybe watch those around earnings results. And at this stage, it's just waiting for the earnings result. Amazon is pretty similar. It did break the downward trend line over here. Expected highs and lows. These are the closest strikes to, of course, the earnings. So we know where it's expected. These are some highs as well from the supply line side of things. And we know we're at critical ahead of the earnings report. Funny how we're at critical with Amazon. We're at critical with Google, which is just here. There's the horizontal resistance. It's always the way that we find things. In other news, natural gas actually got destroyed down to this yellow line that I've been looking at. So it actually hit my alert. It's so close to taking these lows out. I'm very, very interested in finding out how natural gas reacts around this area. And this just shows you why buying dips, especially in the widowmaker being natural gas, is so dangerous without looking for the right procedurals. This is down 75%. That's a huge drop in natural gas and an absolutely capitulating style trade. Everyone will be scared of this thing. And as it hits around this area, that's when you're looking for the signs. You've got to be patient and have the temperament to be able to react to these types of things. Natural gas at a critical level, still potentially some more to go though. Let's move over now to the rest of the markets. IWM hits these highs similar to the other ones and swings a little bit lower. What looks like a fantastic breakout for IWM. I never trust IWM by itself. I always look for S&P 500 to come with me, but yeah, looks like a good breakout. Here's the weekly in perspective, and you can't really hate on this chart. You just got to basically look at it and say, oh, it looks pretty good. If bears are going to recommence, though, they'll do it in the next 24 hours, and that's mostly because it just took that little high. Otherwise, onwards and upwards for about 200, 204 for IWM. What about the Qs? Pretty big breakout here for the Qs. Obviously, the double bottom is undeniable at this stage. You've got the Eve bottom, the Atom double side here, and it's broken through. I mean, again, it's not really showing any signs of weakness yet from the Qs. If we have a look at the NASDAQ itself, it breaks all the highs. I never usually use the NASDAQ again as the main catalyst. It's usually the S&P 500, but you can't deny that it's gone through most of the areas. And at the moment, you've got a pretty substantial trend line coming in the bottom. And in terms of the highs, you can see here we've got this. So I'd say it's in a channel at this stage, an ascending one. And if it's going to sell, this is the kind of level it's going to sell from. You can see here pretty substantial zones for the US 100 coming through. And certainly a good one to be watching over the next 24 hours. S&P, yep, it rejected back down. We can now get rid of the gap fill. So that one is completed. I did have some questions coming through. I think the person will know who they are from Singapore. They were asking about what I consider a gap fill. I consider a gap fill when it actually closes to the previous close. So for an example, if we go to a 2 hour and we're taking a look at the charts here, you'll notice that this is where you have that previous closure, then it opens, then it goes down. So I've taken it from those levels. That's where I like to take gap fills. And some people do it week to week. That's the way I like to do it anyway. You can agree or disagree. I found this to be the best for me. So yeah, these are the gaps that we have on the top right now. And if this weekly closes bullish like this, I mean, you've just got to believe that these levels are coming in. And yeah, weekly will be so pivotal. And I really stress that. If we go over to the expected weekly options highs, we actually tap that. We filled the gap on the unfill, and then we rejected with a bit of a shooting star. If the bears are going to recommence, and this was all part of an elaborate trap, it has to be here. A few people messaged me saying they got wrecked in the last 24 hours. I'm assuming they're trading CFDs. Look, you've got to be really, really careful here. You have to be instrument selection. I wouldn't have traded the FOMC myself, but if you're going to hold positions through, I really generally like to hold options because you don't really get stopped out. Remember, instrument selection is key. And during times of, incredible news, such as all of these big stocks moving, You have to think about that. If you're trying to go bearish here, there is no actual confirmation of bears yet. There's no confirmation. You're just guessing the level based on, maybe some rejections and, more of a, okay, I think this is, everyone's going too bullish or something like that. You really need it to take out these lower lows. So once you take out the low, forming a lower low, then you can say, okay, we're defining this as a real turnaround point. That hasn't happened, and I just want to reiterate that. There is no sign of the bears fully committed to this trade just yet. It's just little rejections that have happened at the end of the day that may lead on to a little bit of a spike down because everyone's feeling so much FOMO over the last 24 hours. That's more of a guess than anything else, but of course it's coming off those key zones. Let's now move over to what's going on with US 500 futures. Again, critical level, you can see it. We've been here before. It's just interesting to me that the FOMO over here is so much more than over here. So much more. And I think it's all down to the tech stocks. And because the tech stocks have rallied through this percentage basically 2 to 3 times what they had before, that's why everybody's feeling it, or at least retail people are feeling it. Key level, we'll watch it. We know where the lows will be. We'll come back in 24 hours to reassess. And at the end of this week, we probably should know whether we're going towards those 4,300 plus levels. We'll do a deep dive on the SPY at that point. I'm not going to say this is an easy zone. It's very tough. And I spent a while today thinking about this market, and I'm basically just going with, I want to say the weekly for multitudes of different reasons. If we're talking about max pain for the end of the week, it's still sitting at under 400 at 399. Huge amounts of 395 puts being put in, and then of course 410 on the calls. So we don't really expect the market to hold too much above here, just based on the call wall, and then of course the puts at 395. So it would make sense, maybe a little sell off and end in the middle. That would be perfect for the market makers if they could get that done. Let's move over now to Bitcoin. Hit the upward trend line here that we've got on this dulling market, but still not shortable market. And it looks like, crypto, until it breaks underneath 22,289, you can't go short, and you can't really be too concerned about anything right now. If you're in it long, you're just in a very key supply, and you're looking for a breakout above that set alert here level, because that's where you're going to be taking out these highs. If you end up getting a closure on that, wow, could be some serious moves upwards into the 30K bracket, 28 to 30K. We'll approach that as it happens. At this stage, traps could be here, and obviously bears could be there. We're in what I would call a take profit zone for most traders. That being said, if you're a long-term hodler, you've got no reason to be scared at this stage. Let's move over to the news coming out. We've got Bank of England, ECB, and then of course we have ISM services PMI and non-farm payrolls on Friday. This should sort the market out from what it really wants to do. So make sure to be checking out there. If you want more up-to-date things, definitely follow us over on the social medias. As I mentioned, we've now started to do TikToks. So as of next week, we'll be commencing daily TikTok videos. So definitely follow us out there and support the channel if you can. We're just getting started, so it'll be good. And then, of course, we have our Twitter following and also our Discord and website and courses and other things if you're interested. Thanks so much for following today's video. It was a tough 24 hours. I understand that out there in the markets, and hopefully you were on the right side of things, or at least just stayed away to live another day in these markets. There's always another opportunity on the horizon. Never forget that as a trader or an investor. Feeling FOMO, then you've got to just be able to bring your temperament back. Good luck, guys. We'll see you in the next one. Bye for now.